Welcome to the deep dive. Have you ever stopped to think about how, say, your local grocery store, maybe one you think of as pretty traditional, is actually acting more like a tech company these days?
Yeah, it's kind of wild. They're using all this cutting edge tech customer data. It's way beyond just putting cans on shelves
It
now.
really is. It's like they're completely redefining themselves.
Absolutely. It's a fundamental shift. They're not just selling you groceries, they're building this whole digital world around you, trying to anticipate what you need. It's retail, but totally reimagined.
And that's exactly what we're going to unpack today. For this deep dive, we're looking at the first quarter fiscal 2025 earnings call and press release from Albertsons companies.
Right. We've got a ton of info here.
We do. And our mission really is to pull out the key insights, the important stuff for you, our listener.
Yeah, we want to get past just the headline numbers. We're digging into the strategy. What are the actual moves Albertsons is making to, get customers more engaged, drive growth, create value, especially now when the market's changing so fast?
What's this whole customers for life thing they talk about? What does it actually mean in practice?
Exactly. How are they making that vision happen?
Okay, let's get into it. Starting with their Q1 performance. They reported identical sales growth of 2.8%. Okay, solid.
Pretty standard.
But here's what jumped out at me. Digital sales. They surged 25%.
Wow. Yeah, that's big.
And their loyalty program, up 14%, hitting 47 million members. That's a huge number.
Those two numbers, digital and loyalty, they definitely tell a story, right? Shows they're connecting with people online. And financially, adjusted EBITDA was $1,111 million. Adjusted earnings per share, 0.555.
Net income, $236 million.
Right. But the key thing here is these numbers aren't just random. They're like milestones showing progress on their bigger strategic plan.
And they've laid out that plan pretty clearly. 5 strategic priorities. First, driving customer growth and engagement, mostly through digital.
Makes sense.
Second, growing their media collective. We'll need to unpack that. Third, making the value proposition better for customers. Fourth, modernizing everything with technology. And fifth, what they call transformational productivity, basically getting more efficient.
So if you zoom out, these 5 things are really the building blocks for that customers for life idea.
Yeah, it's the blueprint.
It's a whole approach designed to, keep you connected and shopping with them from the first thought about dinner to checking out.
And it feels like the real engine behind all that customer growth, engagement, even the data for the media stuff, it comes down to 4 main digital platforms they're building.
Yeah, those platforms seem critical.
So let's dive into those. First up, e-commerce. That 25% growth in Q1 we mentioned, it's now 9% of their total grocery revenue.
And that 9%, okay, maybe it's lower than some online-only players, but for Albertsons, they see it as a massive opportunity, huge potential for growth, getting new customers, keeping the ones they have.
And they seem really focused on the experience, right? Like their own first-party delivery and their app, which apparently won awards.
Exactly. And they have this 5-star certification program for the people picking and packing orders. They're serious about quality.
But here's where it gets, I think, really interesting. The innovation side. Using AI interactive features, like this Shop Assist thing.
Right, where you can actually message the person in the store who's picking your order.
Yeah. And also, get this, you can add items to your order right up until they start picking it.
Oh, that's brilliant.
As someone who always forgets something right after hitting confirm, that's not a small thing. That reflects how people actually shop.
You're totally spot on. It sounds minor, but it adds so much convenience. And financially, it's interesting too. Their e-commerce is actually close to breaking even and getting better.
How are they managing that? E-commerce can be expensive.
Well, it's volume and efficiency. They're using their existing stores for fulfillment, which leverages those fixed costs, plus smart tools for labor, optimizing delivery routes. That store network is a built-in advantage.
Okay, platform 2, their loyalty program. The engagement engine, as they call it.
Growing fast, 14% growth, now 47 million members.
And they said it's because they simplified things and boosted the value. And here's proof. 30% of their engaged members are choosing the cash-off option now.
Yeah, people want that instant gratification, that immediate value. It's clear.
Totally.
But the loyalty program, it's way more than discounts. It's key for engaging customers digitally, and crucially, it generates all that rich data they use for their media collective.
Ah, so it feeds the other priority.
Exactly. And they're planning to keep adding benefits, simplifying more, expanding, bringing in partners, basically give you more reasons to stick with them and spend more there.
Okay, let's shift to pharmacy and health. This seems like way more than just a place to get prescriptions filled now.
Definitely. It grew 20% year over year. That's impressive. Driven by script growth, immunizations, and they say best-in-class customer satisfaction.
And they're plugging into the digital experience too, right? Pharmacy, this Sicily Health
Well,
thing, it's all becoming part of the app and website.
yes. And here's why that integration is so valuable. The cross-shopper.
Okay, explain that.
Customers who use both the grocery and the pharmacy, they visit the store 4 times more often, and they buy way more groceries.
Where? 4 times?
Yeah. So the lifetime value of that customer is just outsized, huge. So Albertsons is investing heavily here. They want to attract new pharmacy customers, obviously, but also convert their existing grocery shoppers into these high-value cross-shoppers.
Especially since some competitors are closing pharmacies.
Right.
Creates an opening.
Exactly. It makes Albertsons an essential choice, as they put it, and they're also super focused on making the pharmacy profitable,
Wow.
offering more high-margin services like test and treat, immunizations, getting better deals on sourcing drugs, more automation. They just opened a third central fill facility, which is like a big automated pharmacy, and optimizing labor.
Interesting. They also mentioned GLP-1s, the weight loss drugs.
Yeah, that's a big chunk of the growth, about half. Those meds have a higher price point and drive script growth.
Does that hurt grocery sales, though, if people are eating less?
It's nuanced. They said there might be an initial small dip in grocery spend for those users, but then they quickly start buying more in profitable areas like supplements, lean proteins. So the long-term value is still very strong.
Huh. Okay. And that shrinking number of pharmacies elsewhere just makes Albertsons offering more valuable, a competitive advantage.
Definitely a moat. Yeah.
And the thing tying all this digital stuff together, e-commerce, loyalty, pharmacy, is the mobile app, their omni-channel hub.
The epicenter, they called it. And get this, digital customers use the app almost 3 times a week on average.
3 times a week. Wow.
Yeah. And it started as just a way to order online or get deals, but now it's the whole toolkit. List building, personalized meal planning, product search, finding stuff in the store.
It even has an in-store mode.
Right, that connects your meal plan to what's actually available in that specific store. The goal is just to make planning and shopping way simpler, whether you're doing it online or walking the aisles.
Okay, so those 4 platforms are clearly the engine. Now let's look at the things that enable all this, the strategic enablers, starting with that Media Collective.
Right. This is basically their advertising business. They significantly boosted their high-impact digital inventory in Q1. Think ads on their app, website, maybe even in-store screens.
And it's growing faster than the overall digital ad market.
Apparently so. And they expect it to become a major source of funding to reinvest back into the main grocery business, like a profit center that fuels everything else.
How are they making it attractive to advertisers?
They're using all that loyalty data we talked about, enriching it, understanding customer behavior deeply. That allows them to offer very targeted advertising and prove a better return on ad spend to brands.
Both for brands sold in Albertsons and maybe others too.
Yeah, both endemic, the stuff they sell, and non-endemic partners. They're building sophisticated tools, dividing shopper groups, running campaigns with fast results tracking, consistent messaging online and in-store.
And these tools help Albertsons on marketing too, right?
Exactly. It creates this kind of positive feedback loop. Better data leads to better ads, which leads to more engagement, which leads to even better data.
Makes sense. Okay, next enabler. Enhancing the customer value proposition. This sounds like price and promotions.
It is, but it sounds like they're being quite deliberate about it. Investing through loyalty deals, regular promotions, but also working with suppliers to invest in lower prices on specific things in certain markets.
And they mentioned surgically managing inflation pass-through.
Yeah, like choosing where they don't pass on cost increases to give customers immediate value where it matters most, not just automatically raising prices everywhere.
And is it working?
They said these investments led to sequential improvement in unit sales, meaning people are buying more individual items, not just spending more due to inflation, and they expect that to keep driving engagement.
A big piece of this value puzzle seems to be their own brands, right? Store brands.
Huge focus. Sales penetration hit 25.7%. They've launched new ones like Overjoyed Pet Food and Chef's Toner Meal Solutions for foodies.
Aiming for 30%.
Over 30%, yeah. They see it driving loyalty, digital engagement, more items per basket. It's a core strategy.
How did they describe the overall pricing environment? Is it a price war out there?
They called it rational. but acknowledged competitors are still investing heavily in promotions. Albertsons' response is to lean more on loyalty and personalized deals.
So targeting offers to individual shoppers based on their habits.
Exactly. But they definitely feel the pressure from, the big club stores and the deep discounters.
So their approach isn't just straight low prices.
No, they called it modified high-low. It's not a one-time change, but an ongoing strategy, using data constantly to figure out the right mix of everyday prices and targeted promotions to grow units and profit based on how sensitive customers are to price changes for different items. It's very data-driven.
And working closely with vendors, too.
Yeah, deep engagement on national buying to get efficiencies and align on goals, like simply selling more stuff.
Okay, moving on to technology as an enabler, modernizing capabilities. They have a North Star vision here.
They do. To use tech in everything they do. Make a bigger impact faster, innovate cheaper. It's ambitious for a grocer.
Sounds like it.
And their tech platform apparently underpins pretty much everything. E-commerce, stores, pharmacy, supply chain, merchandising, even that media collective.
Using AI a lot.
Extensively. AI agents helping with pricing, promotions, personalization, customer service, even generating content. Operationally, things like automating distribution centers, predicting staffing needs, especially for e-commerce fulfillment.
Forecasting inventory, too.
Yeah, wall-to-wall forecasting.
Yeah.
They said it's strong in center store, and they're rolling it out across fresh departments. Plus, they're piloting electronic shelf labels, ESLs, in 40 stores.
Ah, the digital price tags.
Exactly. Instant price changes, less labor-changing tags. But it's not just new tech. They're also focused on getting more out of the tech they already have, like their fresh inventory system, off-fresh, and automated ordering.
Making sure people are actually using the tools effectively.
Right. And they're still investing in self-checkout using Vision AI, basically cameras and smart software to make it smoother for customers and also reduce shrink.
Shrink meaning theft or spoilage.
Both, yeah. And it said shrink actually improved in Q1, so that tech might be paying off. A double win, like you said.
Okay, the final enabler. Driving transformational productivity, getting leaner.
Yeah, this is crucial. They need to cut costs to offset pressures like inflation and wage increases, but also, importantly, to fund all those growth plans we've been talking about. It goes hand in hand with the tech modernization.
What are the key ways they're doing this?
More AI and data analytics, automating the supply chain, building better tools to manage shrink and labor.
And the biggest opportunity.
Still leveraging their sheer size for national buying power on the goods they sell. They're targeting $1.5 billion in savings between fiscal 2025 and 2027.
That's a huge number. What are they doing with that money?
Reinvesting it back into growth, into customer value, and offsetting inflation. It fuels the whole machine.
What about labor costs? That's always a big factor.
It is. They've got union negotiations covering about 120,000 employees this fiscal year. They've settled contracts for almost half already.
Are wages going up?
Sounds like it. They're improving wages and benefits, but trying to balance that with financial stability and getting operational flexibility in the contracts. Interestingly, they're offsetting some wage pressure with structural changes like the new tech hub in India, moving some accounting functions to the Philippines, finding efficiencies in how they work.
Okay, let's quickly hit the financials and the outlook. Gross margin rate dipped a bit.
Yeah, down to 27.1%, or down 85 basis points if you exclude fuel and LIFO accounting. But they stressed this was intentional.
Because of those investments in value we talked about.
Exactly. Investing in value, plus the shift towards lower margin stuff like pharmacy and digital and delivery costs. But productivity gains, like lower shrink, helped offset some of that. Their main focus, they said, is growing gross margin dollars, not necessarily the rate percentage.
As selling and admin expenses.
Those actually decreased as a percentage of sales, down 63 basis points ex-fuel, mostly due to lower costs related to the Kroger merger that's pending, better leverage on employee costs, and efficiencies from digital tech development. Productivity efforts seem to be working there, offsetting wage hikes and inflation.
How about spending on the future? Capital expenditures.
They spent about $585 million in Q1. That covered 3 new stores, 36 remodels, and all those digital and tech investments. They also gave $401 million back to shareholders via dividends and buybacks.
And their debt level seems manageable.
Yeah, net debt to adjusted EBITDA ratio is 1.96. Pretty healthy. Gives them room to keep investing.
Okay, outlook for the rest of fiscal 2025. They raised their sales forecast.
They did. Bumped up identical sales growth guidance to 2.0-2.75%. They were previously at 1.5-2.5%.
Why the increase?
They assume pharmacy and digital will stay strong, and crucially, that grocery unit sales will gradually pick up, people buying more items again.
But the timing is a bit uneven.
Right. They expect Q2 sales growth to be at the lower end of that range. Pharmacy comparisons get tougher, and there was a strike impact in the quarter, but then they see things accelerating in the second half, driven by grocery units picking up steam.
But profitability outlook is the same.
Yeah, adjusted EBITDA and adjusted EPS guidance unchanged. Shows confidence they can manage margins even with higher sales. And looking further out, fiscal 2026, they expect to hit their long-term targets. 2% plus identical sales, with EBITDA growing even faster than that.
What are they seeing from consumers right now? How are people behaving?
Value seeking is still huge. That's driving promotions and the focus on own brands. But category trends are interesting, kind of a tale of two cities.
Meaning?
You see shifts to cheaper proteins like pork and ground beef. But at the same time, convenience is still big things like prepared deli chicken are growing strong.
And at the NSI category, natural, organic.
Specialty, health, and ethnic. Yeah, that's growing too. Driven by health trends, but also social media. They actually called out TikTok driving sales of cottage cheese and premium sparkling water.
Huh. So TikTok trends are actually showing up in grocery sales data.
Apparently so. Shows how fast things move. Quick notes on S&P food stamps. They have fewer S&P customers than some rivals, but they're still important. New rules are coming, but implementation is slow, so no big immediate impact expected.
And tariffs. Do those affect a gross much?
Less directly, since over 90% of their stuff is sourced domestically. But tariffs hit their suppliers, CPG companies, on ingredients and packaging. So Albertsons is pushing back on those cost increases, looking for other sources, maybe even expanding own brands more to counteract tariff effects.
So let's bring it all back. That customers for life strategy.
Yeah.
It really seems to be the thread tying everything together.
It absolutely does. These investments in digital, in value, in technology, they're not just separate initiatives. They're all working together to drive that customer engagement, boost the top line, and make the whole operation more efficient.
It's a really integrated approach.
Yeah, it's sophisticated, definitely trying to address how retail is changing so fundamentally.
So thinking about this for you, the listener, it's kind of fascinating, isn't it? How a company we might see as just a grocery store, its financial health, its whole direction, is so tied to these innovations that might seem small.
Like adding something to your cart last minute.
Right. Or
Or-
getting a personalized deal on your phone.
Yeah.
How do these little improvements, when you add them all up, actually reshape our everyday shopping? And what does that signal about the future, not just for Albertsons, but for all kinds of traditional retail?
Yeah, what does it mean when your supermarket acts like a tech company? Lots to think about there.